Fear and greed. These two forces drive the markets, and the markets in turn influence far more than stock prices. They shape politics, business, housing, employment, savings, debt, and in many ways the emotional atmosphere of entire societies. When markets rise, people feel optimistic, confident, bold, and even euphoric. When markets fall, fear spreads quickly, not only among traders, but across ordinary life. Jobs feel less secure, plans are postponed, people become cautious, and the future suddenly looks smaller. That is because markets are never just about numbers. They are theaters of emotion. When the horizon looks bright and growth appears endless, greed takes control. People begin buying not only what is useful, but whatever seems capable of increasing in price. Good assets, bad assets, debt, speculation, overvalued companies, empty promises, financial products. Nobody fully understands. Everything starts to look attractive as long as it can still be sold later for more. At that stage, reason weakens. The crowd no longer asks whether something has real value. It asks only whether someone else will buy it tomorrow at a higher price. This is how bubbles grow. Not through pure logic, but through contagious desire. The market becomes almost theatrical. Optimism turns into intoxication. Risk is renamed opportunity. Recklessness is reframed as vision. Caution begins to look old-fashioned, weak, or stupid. Anyone who hesitates seems like a coward standing outside the feast while everyone else becomes richer on paper. But this never lasts. At some point, fear enters the scene. And fear moves faster than greed. Once trust breaks, the same crowd that rushed in begins rushing out. People sell what they can, then what they should not, then anything at all. Prices fall, confidence evaporates, and silence follows the noise. What looked permanent suddenly looks absurd. Fortunes disappear, companies collapse, debts become unbearable. Ordinary people lose savings, businesses fail, and many are ruined. The exchange, however, remains. That is one of the cold truths of finance. The stock market resembles a casino in an important sense. Many people enter believing they can outsmart the system, but the system itself is structured to survive every wave of emotion. Players come and go. Winners and losers rotate. The mechanism stays in place. And yet fear and greed are not independent beings. They are not demons floating over the trading floor. They are human emotions. That is the central point. Markets are often described as if they had their own personality, but in reality they are extensions of collective psychology. Fear and greed are magnified through money because money amplifies consequence. When people think they can gain quickly, desire expands. When they think they can lose painfully, panic takes over. The market reflects this with brutal honesty. This is why finance is never purely rational. It may dress itself in mathematics, models, forecasts, charts, statistics, algorithms, and technical language. But beneath all of it, the old human creature remains the same. Hope, envy, pride, denial, greed, fear, and herd instinct continue to shape decisions just as they did centuries ago. The tools become more sophisticated, the emotions do not. And because markets influence so much of the real world, these emotions end up shaping life itself. When greed dominates, inequality often expands. Asset prices rise far beyond what ordinary people can afford. Speculation distorts housing, business, and daily life. Wealth concentrates. The already rich gain leverage, while everyone else is told to be patient, work harder, and somehow remain cheerful, while the ladder is quietly pulled upward. When fear dominates, the burden again falls disproportionately on ordinary people. The wealthy may lose numbers on screens, but many others lose work, security, savings, or years of effort. The system absorbs the shock and continues. People do not. This is what makes the whole structure feel morally distorted. If fear and greed truly govern the core engines of economic life, then society becomes vulnerable not only to crisis, but to permanent instability. The emotional volatility of markets spills into the emotional volatility of civilization. And yet none of this is inevitable in the metaphysical sense. If human beings were guided by something else, by discipline, proportion, restraint, or a deeper sense of responsibility, then markets would still exist, but they would not dominate existence so completely. If people could govern fear and greed instead of being governed by them, then bubbles would be smaller, crashes less savage, speculation less insane, and ordinary life less hostage to collective emotional delirium. That would not create paradise, but it would create a more human order. The tragedy is that modern systems often reward precisely the opposite.